Hello and welcome to BQ Prime. A very good morning to all the viewers. I'm Hiral Dadia. One stock that is in focus is a KRBL on the back of earnings. Revenues have seen a growth of 15%. Profits have grown 18%. A slight downtick in terms of margins coming in there. Joining us on the show to discuss more is Ashish Jain, CFO at KRBL. Ashish, good morning and welcome to the show.
Thank you for having us.
Always a pleasure to speak to you. Ashish, my first question coming to you is, have the numbers met your internal expectations?
Yeah, so I think if we look at our internal year-long plan, we are well on track on that. So yes, as per expectations. Yeah.
Right. So overall, if you see in terms of margin side of it, we've seen a dip that's come in on that front. What's the reason for that?
Yeah, so that's really driven by the year-on-year increase in the cost of goods sold. So as you know, we buy paddy in the Kharif season, so which is primarily in the period of October to December every year. When we last purchased paddy in that season of 2022, the prices were significantly up. So which is what is really reflecting on the cost, especially on a year-on-year comparison. However, the realizations have also improved, but the increase in cost is more than that in realization, which is causing a slight dip in the margin.
Right. And Ashish, are you expecting this to continue in the coming quarters as well from a cost perspective? Is it going to be elevated?
Yeah, so I think the cost have, if you look at the average cost over the last 3 quarters, they've been relatively stable because that more or less gets locked in at the time of purchase of paddy. So the question really rises in terms of what is likely to expect on realization. So there we are seeing strong demand, both in our domestic as well as in the export segment, and rice prices are holding up. So we expect overall the margin situation, except in probably very short term, to hold up for most of the year.
Right. Ashish, moving from there on, if you see between exports as well as the domestic business, are you seeing a shift happening wherein exports could increase? Because currently around 38% of the revenues come in from exports.
Yeah, so if you look at our history, historically, exports have been around 50% of our revenue. I think over the last year or maybe a year and a half or so, that ratio has been slightly skewed towards domestic. We believe the outlook for exports is over the medium term is kind of very strong. As you know, India and Pakistan are the only 2 major basmati producing countries. And there is a natural market for basmati, so we do see that ratio getting restored. However, I'll be able to give you a firmer picture at the end of Q2.
Right. And with the government banning, non-basmati, does that really mean that the demand for basmati could increase from an export perspective?
No, so the consumers of the 2 segments have fairly stable taste. So we have not seen the migration from one to the other or vice versa happening very often. So yes, there is a ban, but therefore the overall impact of that ban on our business, which is primarily basmati oriented, is very, very minimal.
Okay. So, I mean, it does not lead to any tailwinds for your business.
Yes.
Right. And any quantum where the company exports non-basmati?
I mean, overall, basmati of our revenue is a very small part.
Right. Moving on from an expansion perspective as well, if you have to look at Gujarat, Karnataka, and Madhya Pradesh, commercial production commenced in Gujarat in June. Karnataka as well, the civil work has started in June, and Madhya Pradesh, the paddy to rice and rice to rice plant, where you've already registered land in the month of August this year. What's the update and strategy with regards to expansion?
Yeah. So, out of the 3 plants that you mentioned, the one in Gujarat and the one in MP are focused on basmati. The Karnataka plant is going to focus more on non-basmati. Now, in non-basmati, as we've explained earlier, we see that as a huge opportunity. Bulk of consumption of rice in India happens in non-basmati, where there are essentially no large nationalized player offering packaged basmati. So we see a huge value proposition that India Gate can offer to the consumers there, and it's with that intent that we are setting up the plant in Karnataka. And the other two are expected to enhance our basmati capacity. The logic of the Gujarat plant is that it's located very close to the Kandla port, so it helps us in speeding up the supply chain for exports. And also, it's located in the western part of the India, so it makes it more efficient for us to buy rice that is grown in that part of the country. Madhya Pradesh is also a very large basmati growing region where we did not have on-ground presence, so the new plant is expected to create that. So overall, the strategy behind expansion is to help us focus more closely on non-basmati and also to sort of focus more on basmati, both in terms of coverage and efficiency.
Right. So, once you have the non-basmati plant up and running, what will the overall capacity look like between both of them?
Yeah, so let me answer it this way. What we've said earlier is that once the three plants go live in a stable state, we expect the three plants to add about 400 to 500 crores in terms of additional revenue.
Okay. And just to understand, how much will the non-basmati contribution then be?
Yeah, so see, the number that we are looking at for non-basmati is to contribute around 5% of our domestic revenue, excluding power, by end of this year.
Right. And in turn, will the exports of non-basmati also increase for you if the ban is lifted?
Yes. So I think we see, again, there is a huge opportunity in terms of non-basmati exports. We were already working on that. And I think as and when the regulation supported, we will resume that activity.
Right. And with regards to this expansion, is it already funded, or there will be further funding that will go through to, throughout 24? And if yes, how are you looking to fund it?
Yeah, so the total expansion capex is around 250 crores. All of that is going to be funded by internal accruals, and we have adequate cash on the balance sheet to do that.
Right. Overall, from a buyback perspective, what's the rationale for the buyback?
Yeah.
65 lakh is what we are looking at. I think a 500 rupee buyback price. What's the view on it?
Yeah, so we evaluated our fund requirement, and we felt that at least for now, maybe not for all the time in the future, we have more funds available than are needed for the company's operations. So therefore, we evaluated in terms of distributing it to the shareholders. We've already been distributing dividends consistently. So what we decided this year is to add buyback to that. And we generally feel that buyback is a good tool to create value for shareholders, and that's really the logic. In terms of the amount, the total buyback size is 325 crores. And this has been arrived at after evaluating our needs, primarily in terms of needs to fund inventory for our growth.
Right. And very lastly, in terms of FY24, what's the growth expectation?
Yeah, so we generally don't share guidance, but as of now, I think if you look at demand for rice, that continues to be strong. So we are fairly positive about the year.
Right. That's with regards to where, overall business goes. My last question coming to you, Ashish, is from a rice pricing perspective, what's the trend looking like?
Yeah, so the general trend is that if you look over the last 12 to 15 months, rice prices have been higher than they were in earlier period, and several factors have driven that. I mean, just to see what seems most relevant right now, we are seeing three things happening. One is that there seems to be some weather-related disturbance in some key rice-producing countries. We hear a lot of impact on countries such as Thailand and Vietnam. So that's sort of affecting the perception on supply. Second is India has also resorted to a ban of various varieties of non-basmati rice, which is again creating a particular perception on supply. We believe these are the two factors that's impacting supply in the short term. However, when we look at the overall picture and we look at global forecasts by informed agencies, we are actually looking at a year which is probably better in terms of overall global rice production than the previous year. So we believe that these price changes, especially in the last 3 to 4 weeks, are short term, and the rice price should settle down. And overall, the world should not see a rice shortage in the coming year.
So, Ashish, what's the delta between global rice prices whereas the rice prices in the domestic market so far?
Yeah, so it varies variety by variety, but in general, India is seen as a very price competitive producer of rice. This is one reason why even after the government levied duties on several varieties of rice in September 22, between September 22 and March 23, exports actually grew for non-basmati despite that duty. So which clearly indicates that we were price competitive even after that duty.
Right. All right, Ashish. Thank you so much for speaking to us at BQ Prime, and good luck for the quarters as well, and on the expansion plans, and speak to you soon again.
Thank you.
So that's the management of KRBL. If you see from a quarter perspective as well, good numbers coming in there. However, stock has trading under pressure today with cuts of a little over 2% coming in there. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BQ Prime.